So yeah, this is just going to be a casual. So if at any point somebody wants to interject a thought, a question, yeah, want to change the subject, when I finish talking about this, whatever. But I just wanted to start doing something on the Vanta side regularly to give our members and our active participants an open forum for connection and also asking, clarifying questions. It's just a good time. It's casual. I'll bring some type of an idea to the table, but this will be a regular thing from about 6:30 to 7:15. It's not, we don't have to go forever. We can go longer, but we'll try to at least have 30 minutes of you know something weekly, unless out of town or something like that. So this is a little nugget I've been playing with and watching some interactions. I find it interesting, so I wanted to share it. One, to just kind of say this is kind of something that on the newer side, a newer application that I've been toying around with. And two, maybe my thoughts on this will spur someone else's thoughts on this, like, how ideas kind of hatch out and grow away from their original, whoever, started with it. So let's just go over here to, this. And I haven't gone back through. I mean, I've gone through this, but this will be like we'll go through this live together, and kind of look at it. Um, so let's just take this day, right? Kyle, this kind of goes back to something you said. You were talking about the true opens, like, man, the market seems to really track back to those. And Banks and I were clustering the true opens. And so, for anyone that's not aware, the way that we're tracking this with time, the true quote unquote true open, say of this quarter, right? So this is quarter one, and this is a Sunday night. So this is a Globex open, and it's an hour and a half after the market opens. Is when that quote unquote true open is. So it's the second 90-minute period, because we divide this entire 6 hours into four 90-minute periods, and we're looking at it zoomed in, um, into 22 and a half minute candles. So each one of these candles that's the micro sessions that we talk about. So that's what we're looking at, and then we're looking at the start of this at 1930, so it'd be 7:30. So what I was thinking is, tracking those true opens is helpful, but it gets kind of busy on the chart. And then I thought, I wonder how untested true opens react. So I had looked at that for a while, and then I thought, if we're assuming that true opens elicit some type of importance to some extent, either from a hedging perspective or from some myriad of algorithms that run on a time-based frequency that are rehedging or taking positions or targeting liquidity or moving the market. Let's like play with them. Let's keep up with them for a little bit and see what goes. And then I thought, well, really probably that entire micro quarter is probably pretty important, because we've seen, as you mentioned, Kyle, like we've seen the midpoint of quarters in general, whether it's an accumulation quarter or a manipulation quarter or a midpoint of an entire 90-minute cycle or the midpoint of a day or the midpoint of a gap, like a gap up in price from one day to the next. Like we've all observed the nature of that, and we commented on that like last week or something. So if we just doctor this up a little bit to make it a little easier on the eyes, at least for me, the way that I would like to see it. Um,
Goes canary yellow.
yeah. Well, and
Easy on one.
we can we can make it a little more transparent here, but you take this guy and we'll make these lines a little bit thinner real quick. Oh, that's the opposite of thinner. There we go. So let's just say, okay, this was important and we didn't really go back to it. Now, so it just stands. We put in the true open micro and then we open at the high. Um, there there is a case to be made, and I'm going to do some more extensive back testing. This is just like, the idea as it's percolating in my mind, and I'm trying to visualize it. And there's probably a setup to take advantage of this type of impulse move. That's a super tight risk and a reward. Say it's like a 1-to-1 or probably 2-to-1, like you stop at the midpoint and enter at the high kind of thing, is part of how I'm thinking of implementing some of this. But so you have this one. We don't test it till over here, so we'll look at this on a smaller time frame when we get there and see what we see in the order flow, which I think is what I found to be the interesting part. And then we have another one here. Again, an hour and a half after the midnight. I can't really help you right now, Nugget. You're gonna have to go downstairs and get assistance from an older sibling. Okay? I'm almost done. Oh, I'm not almost done. That's a lie. I just got started. Um, so we have this Euro set in the Euro session. This spot right here, which comes in, and we do interact with it. We close above, we close back inside, we test the upside, and we work all the way through back to the base of the Asia Q1 or True Open range, and then we extend challenge through and eventually land up here at the New York True Open Micro, which we'll do in blue. And then what I find interesting, so now let's minimize this. Okay, this is what we're looking at. We're going to look at it in detail and see what is there for us to glean. So let's go back in time. And we're just looking at this on a 1-minute chart. That 1-minute chart that has order flow information on it, like large market trade orders and delta. And we can look at it on even a smaller time frame if we want to. But these, let me do one thing here because I don't want those vertical lines. There's going to be enough cluster on this chart without these things showing up. All right. So the only thing that the notice in this one really is just there was some large, I think those are large market buys, if I'm not mistaken. I could probably turn the color on for those a little bit better. Let's see what we got here. So nope, there's a passive absorption. So there's a large market buy or large market sales that were absorbed here and here. And then we trade up out of that. So if we just look back at this, structure, the entry would definitely have had to been, enter at 24, tightest risk could have been just to this local swing low. And then, so the risk reward on that's, 4 points. And or let's call it the top of the candle that closed above. And then we can take this little tool and we can add points and risk reward. Then we can turn on this 200, 400. This was supposed to be 300. And I think I was doing a 350. Just, whoa, easy. So looking at these as risk reward stuff. So 3-to-1, 4-to-1, 2-to-1, 3-to-1, 4-to-1. You get the idea. So just looking at can these give us hard edges in the market where maybe it's not a structural trade, maybe it's not necessarily this you know, um, I don't know, prefabbed, volume profiles telling me this kind of trade, but maybe it's just in the moment of the order flow and the time that there's an opportunity at the start of the next micro to look at the structure that's formed as we build the high, mid, or low of this, what I'm considering a primary micro session, to take advantage of it. So even at a 3 to 1, I mean, that's not massive points, but you're, 27 points. Like that's a good trade, especially when you're risking 4 points. So, 3 contracts, 4 points risk, scale, one here at 3 to 1, and you've paid for your risk, stop to break even, and maybe whatever target, this failed, attempt to take back or whatever. But there's these little nugget of opportunities in the moment. And then the other thing that I'm looking at is we go through some time, go through some more time. I'm going to use the scroll bar. We get to Euro. And actually, one thing I need to fix here, this always happens on the small time frames, is these things don't exactly go where they're supposed to go.
If you figure out how to fix that too, please let me know because that's been driving me nuts.
Yeah, it's been a real annoyance for me the whole time. I have to. That's why I just keep them over here. But
Yeah.
so in this is where the micro open of Euro session is, and you can see one thing that stands out to me, at least initially, is the low holds on the first couple of attempts to test it, which we see here as well. Um, and so again, you could have. Man, I left that little tool all the way over here. And now I know you can look at anything in hindsight and make it awesome. But if you're sticking with a bullish thesis, blah, okay, if I'm going to say no close below or something like that, entry at the midpoint, say you take an entry at the high with your stop there, that's a stop. But one thing that's interesting is we don't extend even 100% of this range to the upside. And that's something I've noticed when looking at these, is the lack of ability to express at least the width of the actual range. So if we take the actual range, we go 1 to 1 here, and then we're thwarted. Like everything slows down, gets real choppy. 1 to 1, the length of the entire true open section seems to be kind of that first make or break spot. Earlier on this trade, if we go to actually the full size of it, right? So not our entry, but just the full size of the range, you can see we extended past 100% extension, and then kind of looks like we probably fell about midway between 1 to 1, like a full extension and two extensions, because 300% is really the 200% mark. I mean, you understand what I'm saying with that? It's kind of weird the way that they put it in there, but if we take this and go there, it's 200% is just double this range. Um, so some of the nuanced stuff that I'm kind of noticing right off the bat, is the inability to expand beyond, much beyond the 1 to 1 extension, is something to make note of. Also, we failed to push up to the Asia session liquidity, which would be another like little signpost, right? And then we enter back inside, and this is where some more work needs to be done. We enter back inside, and nothing shows up like order flow related. Like no heavy delta, no anything. If you think if this area mattered a lot, you would want to see large market orders, delta, or something. Then we slip below it. We trade into, Lord have mercy. we trade just into the, and this would be like the first real retest or test at all of this, the Asia. And you can see that we do get a large market order that comes through down here. That was a little there, but you get a little down here. So we leave that true open range, we enter back into it, we fail out the bottom, and we trade back into the Asia range, true open range, and then we find, you know, some attempted hold. The other interesting thing would be, man, I keep deleting this or moving it or something. Let's take this guy, move him over here so we can play with him in a minute. This is some interesting stuff coming if this has not been fun so far. But this is the way that ideas get hatched for me. It starts with just a general curiosity, and then I just start playing with ways to interact. So the first time we broke below this range, the same kind of story would be true. That we extended a 1-to-1 of this range and failed to expand to a 2-to-1, a true, like, doubling of that range. So again, that 250%, if that's what you would call it. And then we slowed down. So we did the same thing here and here. So we did a 1.5 range expansion to the top, 1.5 range expansion to the bottom. Continuing on, we get, I guess there is a trade here, although muted, and into what I would consider support. So it could be a really, if we were going to look for this to really expand, you'd want to see this be kind of the spring point lower instead of a place that we started to struggle. So it can also, I think, give you some guidance if you're trading through a late night. Then we get back inside. This would have been difficult. I think this would have just been hard, right? You're back inside, so you want to kind of rebid the low and then target out the top. Don't really get that. Trade down again, don't get it. So I think this test here really starts to contextually would start to put you looking for the long side. And that's where you could risk off of this low, because Banks talks about that idea of like this auction down was fine, this auction down failed, and it failed truly, like, although it's small, it failed to continue, and then they got some success to the upside, and then this leg right here kind of holds the keys. Breaking this, you would not anticipate this to hold. So a rebid of this area with the stop just below makes a lot of sense. Targeting an expansion to the other side, back through the range again, which you get. Pulls all the way back, probably stops out people at break even. Again, though, looking at this area is pretty key. Finally get back above it, extend again, still barely get up to that 1-to-1 spot, and then we're coming in now to the New York session open, or we're in the New York session at 6 a.m. right here, and we drive higher again, looking to trade possibly out the top. We expand through the overnight liquidity. Why this is extending through, the Lord only knows, because it's supposed to not, but we trade through, and then we get the open for the New York AM, which I find this to be quite interesting. So these red dots up here are when the DOM is speedy to the downside and absorbing. So it's kind of an order flow tool that this red background is pace of tape. So you can see coming into this 730 to 752, which is the range, that the bears are pretty motivated. We float up and then we secure the midline. And so with no trading at all or interaction above the top, as we come up, into that 52 spot, 52 meaning as far as time, then I think there's a consideration to look for a way to risk, right? This auction up failed. this auction up failed, this auction up failed. So this high is in good shape. uh, from the sell side, they've secured this if they can get a close below, which they get right here. I think this is your normally scary looking entry because it looks like you're just shorting the low of a move, but understanding that there was a lot of structure built in here and where it is in time, that this is kind of a defense of this upper liquidity and kind of makes you possibly, again, easy to say in hindsight, but makes you possibly able to entertain um, short entries, risking maybe not even the entirety of the range, but let's just say that for the sake of analysis. Okay, so the entirety of the range, we get that 2-to-1 trade. So theoretically, somewhere off of here, we come back, can't even interact with it, secure this now, and then we get that expansion all the way back through. But look what happens here, and this is where it starts to get interesting. We know that this Asia range hasn't been traded below the midline. It only has been tickled into a couple of times, and now we are back down into it, and look what starts to show up. Big market sells, so some intent, right? But they're met with passive bid side absorption, meaning that the bid was thick, and then we get this aggressive delta bar. So aggressive selling into the lows, we get this green dots and this green triangle, both of which indicate a bid side absorption. So again, if we'd have gotten this activity somewhere random, it wouldn't be as pertinent to us. But since this information is coming inside of an area of interest, then it can be possibly acted upon. Now, this is a news day, or maybe it wasn't a news day, but look here. This is where it starts to get interesting. So holding this, right? This is liquidity down here below these, below this, and below this for sure. And look what we get. Massive market buys, positive delta coming out of 2450. I mean, the opportunity to one of two things. If you're trading micros, put you on a risk of 24 points, right? So let's take this back down and say, okay, we've tested this twice now and we've held up. So let's put on a big risk, right? Let's get 2 micros with a 24-point stop, roughly. Or no, that's not 24, is it? Yeah, it is probably 28. So let's risk $120 for the chance to trade where? At least back to this area. Coming into the open, just bliss. This has been traded through a couple of times now, so it would kind of be inconsequential. We also never had any massive order flow situations in there, and so it was really kind of no man's land. But look at this. We trade back up. We come into the high of euro, which we've already traded through both times. But then look at the delta that lights up as we trade back into this kind of secured high, right? I mean, like there would be fear at times of trading against a move that was this strong. But with the information that we've garnered, we know that this has been softened. We've tested here 3 times. The buyers really put their foot down on this leg. And then when we got to where it really mattered for this move, again, we would have scaled here 85 points on one contract. I mean, that'd be your day anyways. You'd be done if you wanted to be. But here, then we have the opportunity because of this 8250 spot, and these are 1-minute candles. As soon as we drop back out of this range, I really do think that risking a trade against even like the halfway point of this range, knowing that you have a fair value gap here, and maybe you're risking, you see this wick up, okay, so we could, you could expand your risk or whatever, but it's 7 points, and it can be scary looking, but you're risking 7 points even if you just went for 3-to-1. That's just testing back into the OR, which is down here. It's hard to see a little bit. Let me make it bigger for you. right? Testing back into the OR at a 3.5 to 1 or 3 to 1 is 41 points on that trade. And you see that the sellers are seriously motivated trying to get back through. When you get back down here, bid shows back up. Can we be nimble enough, or should we be nimble enough to flip that trade, try to get back out the other side? Back up to OR high. And now we're trading in this Euro session finally has its day, right? And it would be logically if we're trading with these true open ranges in mind, say midpoint to midpoint, that would be kind of your trades midpoint to midpoint, midpoint to midpoint. Trying to find a trade in here possibly. I think this would have been a stop initially, but I think the ability to join in would have been a thing to try to attack it again. You don't get the entirety of it, but again, knowing that 496 and this low is a key spot, we would have wanted to be covering into that. So again, the opportunity to be a little more active with a little less, I got to hold this trade for eternity, which is one thing I'm kind of working on. Some part of what motivated me to kind of even start thinking about this a little bit was some of that, right? Well, in here, there's an opportunity to garner a trade that still pays 3 to 1. It's just smaller, right? But as soon as we bid here and don't, really find any closure or acceptance below on a 1 minute time frame, we start thinking possibly the other way. Then we get back up in there, start to struggle, come back down. This low should be secured, come back up, trade through it. So now I don't want to go too far. Now, can we think about the risk we would have to assume here is a little bit big, but can we think about the opportunity of a trade? Where did that thing go? Why does I need to save it? This is all, haven't done a ton with it. The opportunity of something here off of this lower area. Is this where we were? I think this is where we were. Right. Say, okay, we close below this for the first time on a 1 minute. Do we have anything to do? Well, there's a set of single prints here. We got big buyers that got absorbed. We're aggressively selling. We still have failed up here, and now we failed here. So the anticipation of a failure in here, if we're going to continue what would then be one time framing lower, shout out Purdue. Another opportunity for a trade from midline as your stop and that fair value gap as an entry, or even if you had to come all the way down here, you're still only talking about an 11 point or 15 point risk. You're going to have to put some risk on, but again, you get that 3 to 1, right? And you could scale some at 2 to 1. And then I didn't go back far enough to see if there was anything down here, but for the sake of the analogy, we're coming into lunchtime anyways. Wanted to be able to hold a trade until about, kind of get out of stuff and then wait till that lunchtime opportunity comes in. And then I don't think I actually drew the lunchtime. So we can go here and throw that in. Any thoughts, questions while I'm pulling this over? Makes no sense, makes some sense, is a giant waste of time.
No, I like it. I think I want to spend some more time thinking about how you would try to position on some of those.
Yeah, I think order flow that comes in these areas we could use as primary. I think a dynamic and difficult way would be to be monitoring accumulation, manipulation, distribution stuff as these develop, both the true opens and the candles that follow them would be a challenge. Um,
I think my inclination would be to pay attention to where the candles are closing
yeah,
on like 1 minute, 5 minute,
and then we get
maybe even like the
into
next session.
we get into this drive up, which we close above. Maybe you take a long stab here. Obviously, don't get anything. Then the rest of this day just kind of peters out. Really, there's nothing up to the close that was especially interesting. And so then we can go back to this time frame and say, okay, well, what were those trades we were looking at? We were looking at trying to be possibly long out of here to trade through, um, possibly short. This would have been really hard. You'd have been executing in the wicks of 22 and a half minutes, but I haven't even looked at the narrative of, continuation or accumulation, possibly. It barely traded below that. And that's another thing we got to talk about is some more of those conditions for this. But either way you look at it, this looks impossible to trade on this chart, but when we drop it down over here to like a 1 minute, there is actually some opportunities. I think fair value gaps, order blocks, order flow, balance and value, anticipation from a larger picture of this day. This up here might have been key. I mean, I know this high was key, 590, because it was defended aggressively, right? And I think I was in a long trade here on this day, if I'm not mistaken, scaled and wanted to see this trade through, and then that kind of obviously washed me out. And a lot of times at that point I'm just done. I'm like, well, it's going to be, whatever. It wasn't easy or whatever. But I think some additional context with some of this stuff would be real helpful, especially when they're wide like this or when they come in at like swing highs, I think is also really interesting. But to me, this was telling a story or a narrative, and then this is just real manipulative, right? And this was continuation. So this was continuation. This was looked at as accumulation. This 90 minutes. This was expected to be manipulation, which I think we could make a pretty good case for that being manipulative, right? And then this was distribution, which we just kind of took out late stops from this move down. So again, this I'm just looking for ways to continue to organize information into what can be actionable. And I've looked at it enough to know that like there are plenty of good trade opportunities leaving these areas. If you're just more mindful of your R skew and and where you are in space, like what lows or highs are there. Like once you trade 466, I mean, you really got to look for where, okay, are we going to, it's way down here is your next target or whatever, like I think that calls in, you have to contextualize some of these trades. It can't just be blindly, but at the same time, I think they give some areas to really, pay attention. Um, and then even going into like this overnight session, which we can go just a little bit further um, into here, it's interesting that um, I'm not doing all that again. I'm just going to make this big, grab this, drag it over. So this happens inside, so wide and then really narrow, and then narrow again. But let's look at it on a small time frame. And I don't usually trade Asia session, so I wouldn't be super concerned. But you can see how possibly this afternoon leg of true open may keep you from just piling in short, knowing that since we put it in, you know, that was kind of a retest of that midline, um, midpoint up. What do we get? Oh, shoot. What, baby? What?
We were playing, and
No. I can't do a story time right now.
no,
Just hold.
it was just the last two. We were playing. I got knocked on my switch, so I took over for.
Sorry, I had to get the Fortnite update for the evening. Again, a push up to that area, although small in distance or whatever, struggling to continue. Um, then we get, effectively the same range, which I also find is interesting. And there's some nuance I haven't mined out of all this, but all right, so let's get over here to this guy. Again, we can see, we trade above, we just can't get going. And this is interesting because this would be where you'd want to see buyers step up and really push, go back and test into this old Asia range, right? And either because of timing or because of whatever, just we were not ready to go there. Um, Trade back in to the Asia, fall out the bottom, trade all the way through. We get back over here to the New York True Open. Over here, opening above afternoon and the other True Opens are kind of overlap. Attempt to hold, trading through, and where we stop. Big fat sell order, just boink, boink, boink. I mean, that's very much dry. I mean, this is executing right on these spots. So definitely a not so fast. And then look what we get. Trade back into the New York. It's hard to see, so I'm going to delete the red and in there.
Dude, the way those those big orders are coming in like right at those points.
It's
That's
very interesting.
that's very very interesting.
Yeah, that's some of the stuff I started to notice, and I thought, well, there might be something here. Now, again, I haven't fleshed all of this out, right? But I'm also going to turn off the background on this one because it does get a little bit much to see. But you can see here, this opening range just traded all the way through this. So, and we're back into this area that we've tested a ton. This would make you think and be aware that the sellers, if they're going to do this thing, it's really got to go from 437. Like 437 can't just be the destination where everybody's comfortable scaling. It's got to be the place, like that's where it has to go. It has to reinitiate from, or we're going to chop around. But I'm not interested in being in trades that are going to chop around. So if I was going to try to be short, let's say we took this this break right here. We're like, oh my God, like traded all the way back down into here. Take a short trade out of there or something, knowing that it has to go and thinking, well, we might be on the business end of like a really good move or something, or at least the potential to be on the business end of one. Where is that? There it is. To move this guy over, and say, okay, for the sake of discussion, if we said coming into the open, we were cool with snap shorts to go trade through the overnight low, you still get 3-1 or yeah, you get 3-1 on risking the OR. I think you could bring the risk down to OR mid. You could go OR break to back inside the range, bring your risk in even a little more, still get 4-1 on that trade. Bring your risk to the kind of where these lines overlap from the old afternoon and the morning and the current morning. We just don't want to see it back up there. Snap into the trade. Still get 2.5, 3 to 1 off. I gotta save a template for this because it is stupid to have to keep redrawing it. This is like the 5th time. You see, like coming right into that 3 to 1 extension, and the other thing I've noticed is that 3 to 1 extension on roughly the ranges starts to be the spot 2.5 to 1, 3 to 1, where you need to get some off. So it's like a flexible it's like a flexible guide for reasonable scales, and especially depending on your entry, that can you take a meaningful pullback without getting stopped to break even? If not, then heavier scaling in this area with the anticipation that you don't want to just take a break even on a large portion of your trade if you're using this range as part of your guide. You'd also wanted to see us stay below this afternoon, this pink or purple, this one, right? You would want to get below that and then spring lower. And we did quite not that. Come back up here, big order executes, goes above, back inside, back inside. They still hold the high, which then I think somewhere in here, although it's wild and crazy, look at what's the better risk. You can either stay flat. Again, there's only 3 things to do: long, short, or nothing. If you want a great risk reward trade, how many times it works out, I don't know, but go just above the OR high and just above the New York true open range. This blue, get it easy for everybody to see, right? Just find a short up here, give it another whirl. Because, yeah, we failed here, but we also failed here. This was the spot where bulls needed to really step it up, right? So you get you a little, 3 to 1 or whatever. Get another nice little, even 4 to 1 trade off. And that really starts to add up. This is what I will say, is I've back tested this. I've done some blind replays, like just pick a random day a few weeks ago. I have no idea what the true opens were or I can't remember that far back, and traded them live. And some of these are so saucy because sometimes they do rebid, the low move and you continue. But sometimes this right here is the start of like a 150 point move one way or the other. And so just the more context of structure I can have to be evaluating, the less I feel like I have to innovate or be creative or worry where's the next real key structural level. For me, this is kind of bringing some of that in. And yes, there is an aspect where we would still be really mindful, of course, of where we are in the big picture on the daily chart, on the daily profile. But how we get to the end of the day is never a straight line. And the moves of the market are so wide that we either have to be committed to one side, one trade direction, and continue to rebid or reoffer anywhere we can, or we need to, figure out a way to be a little more managed and fluid with some of what we're doing. So again, this trade would have came down here, and where do you need the bears to really step it up? And it's not necessarily because we made a low, although that's part of it. It's, 437.25. We've got to spring from there to go find the next range open. Well, instead of that, what do we get? We get a bearish DOM, so super aggressive on the sell side, but we also get met with, with the bid. So aggressive sell speed met with a thick DOM, and that's oftentimes a recipe for reversion. Which, if we were going to have reversion, It's a pretty logical place for it. We don't have to jump into that trade right there. We could say, I'll be on the long side once we get above the OR. But you could also scalp this move back up. You could also be sitting, lying in wait on your runners from this entry, to see what you get. This day looks like it was kind of a little bit of a hoe in that we just ranged. But this additional context could keep you from executing shorts, you know, with too wide a stop, or shorts in like no man's land. Keep you from executing longs in kind of no man's land. Keep you looking kind of in some safer spots. Looks like we made it all the way to the afternoon without anything cool. We'll just do the afternoon session of this day, and then we'll call it on this idea. But it's definitely something that has my attention. So I'd love to know any other thoughts or ways to think about it, or maybe you'll play around with it. Or if you have thoughts or questions about anything else, not even this stuff, that's fine too.
I think one thing you can try to do just to see if there is a lot more efficacy to what you're looking at is to try just picking a different micro session to box off and see if you can tell the difference.
Yep.
Because if there is more to this idea, then it should be kind of noticeable, right?
Yeah.
Yeah.
Good Lord. So this is back up there fighting that old, and that was the same spot we fought
Yeah, I
that
remember
other day.
That was that wild ass close.
Yep. And then I mean
That
that
was the one.
that was crazy. But then what did we get there, right? That's where it gets kind of fun. Like we can just follow it over because now I've got all this charted. We got a inside range, a range inside a range. One of the things I've noticed is when you get a range inside of a range, it gets pretty wild. So like range inside of a range, and we kind of get pretty directional out of there, which is kind of cool. When it starts to go. Right, we're up, 60 points there. And again, I mean, never any traction to speak of below the midpoint. Inside the true open range. Push back up, get an open. I haven't looked at this. I mean, I've looked at this. I don't remember what happens, but just watching it unfold. This is not where you want to see chop. This is where you want to see like this look. We want to go. We want to go. This is like a fake. This is interesting. This would be like a fake no tick OR. Well, it is a no tick OR, but really, the range that really matters is this range here, like this area, both from an order flow standpoint and from if you're using these as a guide. And I mean, so again, I think the takeaway is, yeah, you can maybe try to bottom dig. The other thing is, once we trade above this OR, what have we done? We've also secured above this. So, I mean, I think the long side would be pretty viable. I mean, I think that's enough points for most of us to, make what we need to make. And then if we do, say we enter here at the high and take a stop, maybe we enter here at the high and take a stop. If we enter here at the high, I know I need to save this template.
Just do it. You're halfway there.
Okay. There. Are you happy now?
That'll be the last one you use.
No. Well, maybe for tonight, but
Yeah.
So entry there, stop here. I mean, you're 4 to 1 there, scaling above OR, but then contextually, you've gained this. You've also gained like this. So holding OR high. I mean, you'd have to have. I think this was coming into some pretty wide open stuff as well. So yeah, dude, I love it. Thank you, Purdue. Please have your dinner, enjoy it, and also tell me more of your ideas. But there's a lot. This is like a this is. I mean, obviously you wouldn't top tick this, but I don't know. This is a pretty high R trade. I mean, if we throw in like yeah, that's 10 to 1. Hold it, get to 130. Good lord, and then and like when does that move start? Right at that true open, and then they just freaking immediately get below it. And then if you're thinking level to level, this is not where the move should stop. This is where the move should continue. So even that trade, I mean, 35 points. What is your risk got to be? I mean, maybe to these swing highs, maybe to the midpoint. That is wide though. And then that really is the start of this move down to fully test the euro, and then we still have that Asia below that was never traded into after we left it, and then we trade to it, and then it looks like we're going to trade to it, and then we're going to see overlapping ranges. Man, you want to talk about the potential to just rip out of here. Yeah, it goes back up to where afternoon mid from the prior day as our open. How freaking hilarious. Below here, we expect aggression down to the New York Open. We get that. Trade to the midpoint of the New York Open. Right back up. Screw everybody that's not paying attention. Trade up. This does not need to stop. It needs to get to 760 and then go. Failure. Midpoint. I mean, you could have had some short stabs here, but definitely something there or something here. Trade back through the entirety of the New York AM. Go back down to that cluster. Get the afternoon. This is where the move needs to go, not stop. We go. We're all the way through all of them and close this day out. Oh, that trade back up. This gets too confusing now. It looks like that rapper's teeth. What's his name? Yeah, I'm talking about
I don't think you have to be specific.
overlapping ranges all the way back down to test our homeboy that was never traded back into at 750. Oh, I mean, no, was it 750? Let's see. Oh, I got a little too ahead of myself. Yeah, back into here. And so where we find ourselves now, speaking of this week, is let's look at it. Let's take away all the stuff that's cluttering it up and just look at um let's just look at uh there's a cluster of stuff down here, but we'll leave that one. We'll take this one away. Overlapping afternoons down here, trying to hold up the low. Um, this has kind of been traded through. This has been traded through. This has been traded through. Hold on, babe. We'll leave this because they failed there still. So there's some, what I would perceive is some resistance here. And the onus will be on the Bears to get a trade to 37.25 and then find continuation. Not wicking down here and recovering depending on when it happens. We haven't made it. We're about to see a new true open right here. Actually, over the next 22 and a half minutes, we'll have our Asia range for tonight. So, anyways, that's what I've been playing with, guys. I wanted to share it with y'all. Um, get some thoughts. Obviously, I've talked to Banks about it. Um, but yeah, play with it. See what you can come up with. I'll probably have this kind of on my chart on the side. I'll be watching it. I'll probably try to dabble in a few entries with some smaller size just to get a feel for it. Um, you know, but
Can you what study was that had that pace of activity, the triangles and the green and the red dots?
yeah, it's somebody made it for me.
Damn it, I've been wanting one of those.
Yeah,
I was trying to get down to make one.
let me think. Let me look and actually see what it is. It might be hodgepodged to a point. It wasn't made like as a super custom study. On the wrong chart. Let me see. It was custom, but it was kind of pieced together.
It's not its own study, it's like a combination of different ones.
Yeah, and it's actually coming from a different chart. Hold on. 1 second. Let me find the one that actually is. It's labeled something.
Entry magic, baby.
Yeah. Speed of tape. Yeah, I could probably, because this is a Sierra study, so I could probably share this to you. Um, yeah, I'm just using color bar alerts and stuff. Standard deviation of volume per second is what creates that.
Yeah. If you wouldn't mind copying that, just that chart right there, I'll just inlay it into one of mine and then see if I can't create the indicators myself. I should be able to figure that part out.
Yeah, I think this is showing. Let's see what. There's one more that's called speed of tape 2.
Yeah, so when like skipped auctions or when like it's moving one direction really quickly, like that kind of thing.
This is looking at the same thing, volume per second, but it's looking at volume per second, but I have this chart. This one is filtered to only paint on my actual execution chart based on where it is relative to the opening range. So, like above the opening range, I want to know when the sellers are really stepping in.
Oh, I see. I see.
Below the opening range, I want to know where the buyers are trying to save it. So it'll print a lot more stuff on this chart than it would print. But also I think this one I started playing with another, like some other settings and ways to. It was kind of an execution idea that I never fully got to fruition. Whereas this one, speed of tape, this one actually does tell some pertinent information. Um, and it paints the background like that, so you get your red for aggressive speed of tape to the sell. And again, speed of tape by itself in no man's land is not. It just
Right.
means the tape is fast, but if you're
Well, I want to see where it's springy. You know, like
yeah yeah
when the big buy orders are flying off, like we're jumping up. You know, 2 3 points, not staying within a half point range.
Yeah, and it's a little wiggly too. So like the buying was really aggressive here, right?
Hmm.
And then they kind of, dinkered to hold it. And then, you know, this is also coming into the afternoon, but anyways, by itself, it wasn't anything that I was super loving, although it was a way for me not to have to watch the DOM, and that was the goal. That was how
Yep.
this chart volume, where is it? The volume delta or VD is volume and delta, but it was also visualized DOM. So for me to be
Hmm.
able to see the DOM, or so
Yep.
that kind of makes sense, like why this chart is the way it is now, right? Like this is the DOM. This is delta being built, large orders being traded, and fast tape.
Yes. Exactly.
So
Yeah, that's kind of what I've been trying to gravitate towards. So
yeah,
at least I can see it's possible.
yeah, it is, and then you can make it look like a rainbow as well. But I will give me you know, I'll get it. I'll try to get it to you this evening or like
Yeah,
now.
whenever.
I guess I
I'm
could
in
do it right
no
now.
rush.
This is
Or I
not the
guess
one
I
you
could
want.
just pull it off your chart book if you have it shared already.
I don't even know how to do that. So what I'll do
Just
is
the whole
I'll
thing, I can pull it straight out of it.
do. So what do you want me to do?
If you have already shared